So this is the US oil analysis for Thursday, 7th of November, December, sorry, the 7th of December. Um, Now, US oil, also known as WTI, here on the 7th of this, well, let's talk about the previous to the 7th of December. Now, we've had this, we've had a strong move to the upside. We did come pretty close to this 59 level, is a key level. And we did see this. So I get a scale on here. Bear with me a second. As we can see, we did have this blow off candle just here. We did see prices turn around. This very large candle at the end of a strong move to the upside, somewhat strong, semi-strong move to the upside. These candles are a lot smaller than we'd like, but this very large candle at the end of the move, usually an exhaustive end to the move. And we have seen a subsequent breakdown in prices. We've seen prices come down towards our 57.12. We found support in around the 400 period moving average, as well as we have just here to your left. We've see the move. We've seen price hit towards our 57. Set the 200 period moving average. We have seen a subsequent breakdown in prices. So on the 6th, in light of our highs, a lower high breakdown from the 200 period moving average, we've seen the continuation to the downside on US oil. Despite the fact that we are in an uptrend on the higher time frame, we are seeing a breakdown in prices. Now, previously, over the past couple of weeks, I've said the US oil, WTI, did seem poised to head towards our $60 a barrel, but we were expecting some turbulence before we head up towards our $60 a barrel. It is a psychological level, and we're likely to see pullbacks and some range-based trading before we head up to $6 a barrel. I wouldn't expect us to head towards a $6 barrel in a straight line unless we do have a strong fundamental catalyst. Now, what we have seen is we've posted a series of lower highs. We've seen a move to the downside here. Now, so where we are at present, we've not come down towards our 55.73. We've not quite got down there. The levels that we were looking at that 57.12 to see if we did hold in that 200 period moving average. Instead, we saw a very strong candle close through it. Let's get this scale on there. So we did see this strong candle close through the 400 period moving average. We've seen the move to the downside. We haven't seen any reaction to 56.50, and we have come pretty close to 55.73. So if we are seeing a bit of buy side momentum coming to the market, so if we do see a breakdown, we're looking to see our price react towards 55.73. Now, if we don't have much of a reaction to 55.73, we have to look for the potential targets beneath. Now, if we don't see much of a reaction to 55.73, we're talking 55.21. A break from which we're looking towards our 54.07 level. Can't imagine 54.07 will come into focus here on the 7th, Thursday, the 7th of December. But again, these are levels we have to be aware of over the short to medium term. Now, if we do get a turnaround in prices and we do get a counter trend move, which will be counter trend move in light of our most recent sell-off. So where could we potentially see prices head if we do get a counter trend move and we do find support above this 55.73? So we'll see how prices react towards our 56.50. If we don't get a reaction from the 56.50, a sell side reaction for a move towards our 55.73, we're potentially looking for a price movement towards our 57.12. Up at 57.12, we would have the 400 period moving average acting as a dynamic level, as well as acting as potentially dynamic resistance, coupled with the horizontal level as well. So we potentially have dynamic resistance in the case of the 400 period moving average, and we've also got the horizontal level of. So we'll see how price direct when we do get up there. If we do see a breakdown and a move towards our 55.73. Now, if we do break above the 57.12 and the 200 period moving average, well, the 400 period moving average, we'll be targeting 57.75 to the upside. We're currently at 56, so 55.75 to the upside. We do have to be aware of the 200 period moving average as well. The 200 period moving average has acted as a resistance, as we can see here on this occasion over here to your left of the chart. So we do have to be aware of it. as it may act as a dynamic level of resistance before we head towards that 57.12. But the key levels we're looking for from here, if this is the turning point in the market before 55.73, we'll see our price react towards that 56.50, beyond which we're looking to see our price react towards that 57.12, coupled with the 400 period moving average. And if we don't see a negative reaction from there, possibly bringing us all the way back down to 56.12 or 56.12 or 55.73, we'll be looking to see, if we don't see the negative reaction, let's clean this chart up a bit. If we don't see the negative reaction from 57.12, we'll be looking to target that 55.75, coupled with the 200 period moving average. I can't anticipate prices moving much beyond 55.75. I can't imagine 58.28 coming into focus unless there's an extremely strong fundamental catalyst. Now, with that said, let's just have a look at the daily time frame. Now, on the daily time frame, as you can see here, we've got a series of higher lows. We've had a strong move to the upside. We've had a pullback, and then we've had another move to the upside. Now, we have seemed to have had more of a pullback on this occasion. We've had a pullback, somewhat consolidation. We've broken down again. Overall, though, we do have to be aware that this market is very strong. So shorts would have to be somewhat limited. Sorry. Let's just put that differently. Now, in light of this trend being very strong to the upside, those bears are likely somewhat cautious, unless there is a fundamental catalyst which is supportive of their position. So we've got this very strong close to the candle. We did have crude oil inventories out. We did have a EIA report. So this strong candle closing near its lows, likely an indicator that the market interpreted the information as being bearish. So we potentially have our highs up here at 59. We've got a potentially lower high here. So we do look poised for more downside momentum on US oil. But that position is counter trend. So we do have to remain cautious in terms of our bearishness. So we will be cautiously bearish in light of our most recent, in light of the trade. We're cautiously bearish in light of our most recent trend. The most recent trend does appear to be to the downside. The longer term trend is to the upside. There is no doubt about it. The long-term trend is to the upside, but in light of the most recent trend, which is to the downside, we are cautiously bearish this market. That's put more concisely. And with that said, that's wrap up the US oil analysis. Thanks for watching.